The EU has big goals. Be climate neutral by 2050, reduce greenhouse gas emissions by 80 to 90%, and get a third of its energy from renewables. And all of that costs money. Even if all the states deliver on their plans, which many are behind in, it will still take as much as 575 billion euros a year for 2 decades to reach their target. It's also a big ask for some pro-green companies like Germany. They're deficit-scared and are committed to balancing the budget. Now, all of this falls on the shoulders of Frans Timmermans, the incoming executive VP for the Green New Deal. His job is to formalize this plan for the EU to become carbon neutral by 2050, extend the EU emissions trading system, which lets the market trade allowances for emissions, and consider a carbon tax on all imports so companies can't relocate to countries with easier climate rules. And that's just the beginning. One option is to turn the European Investment Bank into a climate bank to unlock $1.12 trillion, all needed to entice private companies to spend their own capital. It's big changes, big goals, big money, and a big distance to success. I recently caught up with Frans and asked about some of these big climate goals.
How we build houses, how we refurbish houses, what we do in our transport sector, what we do in agriculture, what we do in fisheries, what we do in the maritime sector, the airlines. So you need to sort of refocus your attention on all the issues that have an impact on your climate. And that's what we're going to do. And we want to do it in the first 100 days of the next Commission, starting on the 1st of November, so that we have our climate law ready very soon, and then we can follow up with all the legislative measures we need to take.
So do you need incentives or disincentives? What works best?
I think both. We need both. We need to make sure that fossil fuels become more expensive. Already now, you know, wind energy in the north of Europe, solar energy in the south is cheaper than fossil fuels, so that's sort of paying for itself. But we also need to give countries an incentive to wean themselves of coal. And to do that, we need to invest in the new economy. We need to give them an alternative. Just saying to coal miners, we don't need you anymore, is degrading, and they will say, they will resist, and their governments will support them. But to say to them, we need you, but in a different place with a different job, and we will give you the money to be trained for that job, is a proposition I think that could be attractive.
So if you were to rank like the 1, 2, 3 most realistic and most important incentives and disincentives, whether it's a carbon tax, whether it's a tax on flying, whether it's a tax on internal combustion cars, whether it's a job retraining program, can you help me understand which it is?
Yes. I think, first of all, we have an emissions trading system that is becoming more and more successful. So carbon is already priced, but it's only limited to a certain part of our industry. We need to expand that. We need to also include shipping in that. We need to include the airlines in that, either through this emissions trading system or through taxation on kerosene, which is not being done right now. We also, and secondly, we need to increase the speed with which we get rid of the carbon fuels in our energy mix. We can do that well. Some of it is paying for itself, but we need to create the right grids. Investing in grids is going to be extremely important to help countries to do that. We need to create pan-European interests. We need to make sure that one country can help the other. We need to also invest in the hydrogen economy. I would be a big fan of doing that because, you know, on batteries, Asia is way ahead. On hydrogen, Europe can still lead the world.
Who's going to finance it? Does it need to be, what part of it needs to be public? What part of it needs to come from private?
That's a crucial question. I think I can't give you a percentage. A lot of it will have to be public through a tax shift, for instance, but much of it can be private as well, because, you know, the one thing I've learned over the last couple of years, industry is changing its focus. It understands more and more that it needs to invest in this. Again, we have very low interest rates. We have banks telling us, give us good projects because the money sitting in the bank is not making any money. So, you know, the conditions are really quite good also for the private sector to be part of this. We have an investment fund in Europe, the so-called Juncker Fund, that over the last years has been extremely successful, especially in helping local entrepreneurs, the local economy to flourish. And this has led to a huge amount of extra jobs. Now we need to green that sort of investment to make sure that we focus on investment that helps us make this transition.
Do you feel like there is the stomach for companies to, say, issue more debt or issue equity in the market to put money into these kind of plans?
I think there is. I think this is what I'm seeing. You know, many CEOs approaching me now in my new capacity as the one who's going to have to bring this Green Deal together, saying we want to be part of this. We understand that is the future. We want to attract the best talent in Europe, and we can only do that if we are a clean company.
When do you think a deal on zero emissions by 2050 can be reached?
Well, I hope that we can put the plans into place in the first 100 days. This is my job in the European Commission. Then we have to take it to the European Parliament. There's a lot of support in the European Parliament, but then we'll have to take it to the member states. And it will depend on whether those member states who know that they have a huge, huge effort to take, whether they believe that we will support them enough in that transition. So I want to have credible plans coming out of the Just Transition Fund to help those countries make that transition in a socially acceptable way.